I just want to appreciate the significance of this event this week because it almost coincides with the RBA's celebration of its 25 years of existence. On Thursday, we celebrated our 25 years of having served this wonderful nation as an authority through a convention at the KICC with the theme, Securing Dignity in Retirement, Lessons from the Past, Strategies for the Future. And I think it aligns well with our theme, especially looking forward into the future with respect to wealth creation. What else can retirement benefits do beyond just the saving aspect to bring about economic prosperity, as Abojani is advocating for? So I will take you through a presentation giving you our ideas of what we feel we can do together for purposes of wealth creation, how you can leverage on the existing structures that we've developed over those 25 years for purposes of economic prosperity. But before that, please allow me to convey greetings from our Chief Executive Officer, Mr. Charles Mashira. I stand here on his behalf. Mashira was to be the one making this address, but because of another assignment, you know we are government, so when the bosses call, you respond. He then asked that I represent him, but he conveys all of us all the very best in our economic transformation initiatives. That said, it's important for those who may not have heard of RBA, particularly those who are not from around Kenya, to appreciate the organization and what we have accomplished in the 25 years. That's more for context and the foundation of what we are proposing to do in terms of wealth creation. So my first slide is really to just take you through what we do. We were established through an act of parliament. We are a government institution, and started our operations in the year 2000. We were established with 5 distinct mandates, more so the registration and to regulate and supervise the registration and licensing and operations of retirement benefits schemes in Kenya. We've done that over the 25 years, and we actually currently have schemes around the 1,000 mark, retirement schemes of 1,000 registered schemes in our country. Schemes that are holding all the savings and assets that have been made through this particular long-term saving platform. Secondly, we exist to also protect the interests of those contributors into these schemes. That money goes there from the schemes, from the employers, and is invested. And it's important to protect that economic interest from a constitutional perspective, but also from a social perspective, because this money is to be used at a point in time when we will not be as economically active as we are during our careers and working life. And therefore, it's also a social security initiative. Third is to promote development of the sector. You will appreciate that the total assets that we've accumulated, 2.5 trillion Kenya shillings, is actually mobilized savings that can also be used as capital and can be invested in the various financial sectors in the country to spur growth. And I will be giving you some examples in that regard. Fourth is that we are advisors. As I mentioned, we are government. Our parent ministry is the National Treasury. They are responsible for ensuring that the appropriate policy are rolled out to spur growth, not only in the sector, but also in the economy. And so we undertake substantive research to ensure that the policy proposals forwarded to the National Treasury are sound and are addressing the interests of the nation. And then lastly, we are required to implement any other policy relating to retirement benefits. And last year, the government launched what is called the National Retirement Benefits Policy. And we are a lead implementer of that policy for purposes of ensuring that all the different policy areas that it's targeting to address are addressed. And this talks about pension adequacy, it talks about the aspects of bringing together the laws, the different fragmented laws, and coordinating them into a single inclusive law. It talks about innovation and various other emerging areas. That said, the 25 years that we were celebrating, what do we have to show for that? I've already mentioned that assets being managed under pension schemes amount to 2.5 trillion as of June this year. This translates to 15%, 15.2% of our GDP in this country. Quite significant. And so you can imagine the impact these assets have in the economy. This 2.5 trillion amounts to savings done, cumulative savings done by 7.5 million Kenyans. Now, there is a census that will be done in the next 4 years, but from the informal, shall I say, reports, is that the Kenyan population currently is between 50 to 55 million. So only, and out of that 55 million, about 30 million are working Kenyans. So then begs the question, if 30 million working Kenyans are out there in the economy generating resources from the minimal amount that they're generating to the millions that others earn, why is it only that 7.53 million Kenyans are actually the ones saving for their retirement or planning for their future? It's a question we need to ask ourselves, and it's a challenge that has been given to us by the ministry, the government, in terms of what can we do to ensure that we increase coverage. You can see the pension coverage is at 26%, quite low. So what can we do to ensure that more Kenyans save for retirement and therefore address the issue of future income, but more importantly, also the aspect of social security going into the future? If we don't do anything about it, the reality is then we are going to have to be the ones to cater for the many who are not preparing for their retirement. So it's good to generate revenues, create wealth, but it's also very important that we use that wealth to achieve our objectives. And often, as is in my case, a lot of the wealth I create, I end up having to redistribute to relatives and friends. They call it black tax, yeah? But this is because of their lack of planning. So I have an obligation to also empower them for purposes of them planning and also ensuring that they create wealth. So in line with that, Abojani, we want to commend you for this path that you are following in creating awareness and supporting Kenyans and Africans alike in ensuring that they are economically empowered for purposes of them fulfilling their life's potential. That said, pensions also present an opportunity to grow wealth, and that's demonstrated by the average annual growth over the last 10 years of 17.2% of the assets under management in retirement schemes. So there exists opportunities within the pension space to generate, to mobilize savings, but also translate those savings into growth. So these are just key highlights of what we've been able to achieve. Of course, there's still plenty more that we can do. And actually, currently, our main focus is to increase coverage. We have identified that those people who are not saving for retirement are in what we call the informal sector. And so there is need for us to reach out to them, create that awareness, come up with more inclusive and innovative products that meet their needs. For you and I, who probably are already members of schemes on account of our work or our occupations, we are sorted to some great extent. But what about them who are self-employed or are in small businesses but desire to also attain the levels of wealth creation as we do? We need, as a responsible nation, as a responsible institution, to ensure that we cater for their needs. So having said that, let me get into the crux of today's conference, the issue of how retirement benefits can be used as a gateway for wealth creation. So retirement structures are don't just exist to facilitate survival for when we have attained that retirement age. And maybe I should clarify, retirement is not just age related. Retirement could be you deciding that you've had enough and therefore want to retire early. So we have provisions for early retirement. Unfortunately, retirement can also be brought about ill health circumstances. We need to be prepared for any of these scenarios. And so the main aim of a retirement, saving through a retirement scheme, is to ensure that you thrive at the point you get into retirement. And so what then should you do to ensure that you actually have adequate retirement benefits at that point in time? That's what I will be telling you in the course of this speech. But of course, it's important to appreciate that when it comes to the ownership economy vision, we appreciate that there are various targets. There's a home ownership, business ownership, and financial assets. I will be focusing more on the financial assets, as pension products are financial assets. Therefore, that will really be the context in which I will be speaking about. Now, retirement planning as a foundation for ownership. Why is retirement planning important in the first place? It's key because in the past, we have leveraged, or we have, particularly generations before us, have relied on their investments in us to provide for their retirement support. However, subsequent generations, their mindsets, their perspectives, even just the existing structures that we have, no longer seem to support that particular narrative. Secondly, we are seeing that people are living longer, especially with developments in healthcare. So in the past, when people would probably statistically were estimated to not live too long after retiring, nowadays the Kenya National Bureau of Statistics say if you retire today, you actually will statistically live till the age of 86, thereabout. For men, for women, 90. So we are talking of a time frame of about 30 years after you attain the legal retirement age of 60. So 30 years where you want to continue fulfilling your life goals, where you want to continue achieving your life objectives, including the financial ones. So what do you need to do? You need to have adequate arrangements for that particular phase in life. As I look around, I see people who will still continue being productive even after attaining that particular age. But as a nation, not everyone will be as privileged as we may be. And therefore, it's important that we have in place structures for adequate retirement savings. And so when we look at retirement planning as an authority, we realize it's not just about the money. Yes, the money is one aspect of it, but there is the attitude aspect of it, the psychological aspect or angle. We need to then ask Kenyans, make Kenyans realize that whilst things are good now, there is a point in time that transition happens. We live in a dynamic world, and so we need to make adequate arrangements for a time like that. So our schemes, our legal framework is also tailored towards pushing people or compelling people towards that kind of savings. Whether they are aware that it's good for them or otherwise, we have the obligation as a government entity to make them realize that. Thirdly, is the physiological. Health is very important in wealth creation. And so we have in place systems through what is called a post-retirement medical fund, through which any person who is saving through a scheme can actually save for a medical cover after or post-retirement. So we have in place that aspect. And of course, Robert did talk about the aspect of social and economy, and they have to link. Similarly, we realize that as we work, we have people around us, but they're around us because they have expectations, there are things we do for them. What happens then when we attain that retirement age and then our ability or circumstances change, yet those expectations of what we have been to them are still there. So it's important to manage expectations. It's important for society to appreciate that what it needs to do to complement aging population or the shift of the economic people who are working, so for purposes of us to have adequate support systems for them. So as an authority, we encourage, our key mantra when it comes to saving for retirement is you need to start early. If not today, if not yesterday, then today. As has been, let me use your example, Robert. You say that on every birthday, save something for somebody. Using that example, I can also relate it to an assumption or sample here that we were showing, that if you start early with a minimal amount, it translates to a lot over a long period of time. So majority of us, the challenge with the majority of us is that whilst we are earning, we don't think about, particularly the youth, don't think much about retirement because it looks like a distant goal. Not knowing that even though they put something small aside, it can translate to a lot of money in the future. So what we are advocating for to you, and I will also at this point urge us to become ambassadors of spreading this retirement message, is that to others, is that let's start today. And let's start with the small amounts and progressively grow them. What they are going to do through a retirement scheme is that they are going to grow. Schemes can invest in 15 diverse asset classes, from bonds, government securities, as simple as deposits, but also to private equity. We have provisions for that. Sophisticated products like REITs in our markets, infrastructure projects as well. I'm sure we've all heard about the National Social Security Fund in Kenya that is going to invest in an infrastructure project, a road project. So that's the potential that these schemes have for purposes of wealth creation. So having said that, I think it's important that we all collaborate. We collaborate. It's a call that we collaborate for purposes of ensuring that people are aware of the potential that exists in these long-term savings through schemes. So how then do schemes align with the rest of the market? Is that schemes by virtue of the contributions going in, the investments that are generated, they not only mobilize long-term savings, but also capital. And this then capital can be used to invest in larger investment opportunities. Secondly, in Kenya, as of December 2024, schemes have become highly tax efficient for purposes of wealth creation. How? When you contribute to a scheme, there is the contribution up to a ceiling of 30,000 is tax deductible. When that scheme earns interest, those interests that are credited to the scheme are tax exempt. And likewise, when you are being paid your retirement benefits, upon your retirement age or whenever, you will get those funds tax-free. So there is aspects of tax optimization and efficiency through a retirement scheme. Schemes, as I mentioned, can be, the amounts in a scheme can be diversified, can be invested in various asset classes, and therefore there is some diversification there that allows for real returns and growth. I was at an AGM yesterday where the scheme reported a return of 20.8%. Our own RBA scheme announced a return of 23 or so percent. And this has been the trend this year in the various AGMs of retirement schemes that we've been attending. So you can see that growth in terms of retirement schemes. And then, of course, lastly is the support of long-term goals. We all have short, medium, and long-term financial goals. We can leverage on the existing schemes for purposes of aligning our long-term goals with that achievement. As I mentioned earlier, I realize that not all of us may, even after attaining the age of 60, will stop being productive. We'll get into consultancy, we'll get into starting off our own businesses, etc. And we may not really require the retirement benefits to sustain our living. So for you, it may not be a source of income, but it could be a source of capital for you to expand or even start that particular business of yours as at that point in time. So you can align your various financial goals with these particular schemes. So as I mentioned, schemes, the benefits of schemes in terms of financial security is it facilitates income replacement. We talk about an income replacement. What is income replacement? It is basically the ability of what your retirement benefits can afford you when you retire compared to what you are earning when you are still working. The International Labour Organization advocates that the minimum income replacement rate ratio should be 40%. So if I can illustrate, if somebody is earning 100,000 shillings, then the minimum they should earn from their retirement savings is 40,000 shillings to just ensure they sustain a decent standard of living. In Kenya, it's currently 30%. And this then brings the question of the adequacy of retirement savings in our country. Beyond that, as I mentioned, the standard of living, as I also earlier alluded to retirement benefits being a capital accumulation mechanism. And then, of course, all this is to bring about peace of mind upon that point in time when we have attained retirement age. So what's our role in all this? For sure, RBA is not the one who receives money. The schemes that we register are the ones that receive this money. We just oversight. And so in terms of oversighting this sector, what we do is we ensure that schemes are well founded, schemes are well registered, and schemes are well run. Schemes are overseen by trustees. Trustees may be employees of the organizations that they work in, or could be corporate. Whatever the case, those trustees carry the fiduciary responsibility of ensuring that the schemes and our money in the schemes is well run. Now, trustees are also assisted by service providers, and some are actually represented here as part and parcel of our partners. These service providers, be they custodians, fund managers, or administrators, also are licensed and registered by the authority. So it's just not anyone who can wake up and start a scheme and manage a scheme. No, we actually have oversight of who is managing these funds. Therefore, your money is safe in this particular scheme. That brings me to the second point, the segregation of roles. When the money is deducted from your payslip, it actually goes to the custodian, the bank. The fund manager makes a decision on how those funds should be invested. And those decisions take into consideration the diversity of the scheme needs. Then an administrator does the paperwork. So in terms of security in the sector, this segregation of roles ensures that the funds are actually safe and professionally managed. Beyond that, we have member protection mechanisms. We have a very diverse member protection structures to ensure that your rights are always upheld. We have complaints portals. We have the whole spectrum of how members can be protected, including what I do, which is member education, just to create that awareness for people's rights. Then, on a day-to-day basis, we ensure that there is continuous reforms and oversight. We are actually at the moment in engagement with the government of Kenya on other proposals that we want them to consider for purposes of improving the particular sector. Some relate to diversification of the assets that are in schemes. One statistic that I wish I had posted here is how these funds are invested. You will appreciate that these funds are actually invested in or concentrated in about 4 primary investment classes. This is equity, you then have property, and then you have government securities, and to some extent deposits. But the other 15 also present opportunity. There is offshore, there is, as I mentioned, there are REITs, there are all those other aspects. So what we are trying to do is to advocate for more protection so that then schemes have that confidence to invest in these other asset classes. The aim is to foster growth of those assets and your benefits. Ultimately, it's to address adequacy of the retirement benefits. And then, of course, accountability. We ensure that on a continuous basis, periodic basis, there is a lot of reporting to us. There's a lot of independence in the schemes to avoid any issues of conflict and any malpractices. So we advocate for the following values: transparency, accountability, risk management, all aimed towards increasing confidence in the sector. I think I'll just skim through that and come to talk about our evolving retirement landscape. What we have seen so far of the 900 or 1,000 schemes that I mentioned exist is majority of them are work-based schemes or occupational schemes, and that relates to the formal sector. But we appreciate that households and MSMEs are also contributors to our economy. So our focus is shifting towards them in terms of having adequate schemes for those potential members. Currently, we feel that the formal sector is well consolidated. Everyone in the formal sector saves for retirement, whether it is through a voluntary occupational scheme or the mandatory NSSF. We are all saving for retirement, and therefore we are shifting focus to the informal sector. The other thing is we need to come with innovative products for purposes of ensuring that the people in the informal sector have their financial needs met. And so we realize they can't just save for retirement in isolation. They also want what are called bundled products that address other financial needs. So we have come up through the National Retirement Benefits Policy with strategies on how we are going to facilitate the development of such products. Products that will not only allow for saving, long-term saving, but also investment, insurance, and even access to some short-term funding. So we are looking at that because that's a more attractive value proposition for such members. Flexible post-retirement products, we're talking about now after you retire. As I mentioned, some people don't want to access their benefits immediately. What then do? They can actually take those into what are called income drawdown products. They are investment products, and their money will continue growing for them thereafter. And then, of course, tailored solutions for market segments. We realize MSMEs can't have schemes, standalone schemes, so we've introduced umbrella regulations to ensure that they can join a larger scheme as participating employers. So there's quite a lot that we are doing in response to the dynamic environment that we're living in. And this is what I was just talking about. For MSMEs, you can join umbrella schemes. For households, you have what are called individual pension plans, where you can join as a standalone member. You can put the 3,000, or you can put the 10,000, or depending on how you generate incomes, you can put aside those funds, and they'll benefit from all those tax incentives and benefits from the retirement schemes. So the way forward now is we realize that the labor market is changing. There is a lot of cross-border movement, and therefore we need to advocate for portability of a lot of these benefits. Again, under the National Retirement Benefits Policy, we are coming up with some strategies to that end. Technology is a key area where we are looking into how products and service delivery can be embedded to just make it easy to save for retirement. At the moment, people feel it is too formal. And so imagine a small business owner having to come to Upper Hill, our offices are just here at Raimtula, to look for information. Too much. But if they have this information on their phones or easily accessible, this is something that they would encourage them to save. Focus on pension consumer protection, ongoing, especially nowadays, as there are a lot of enhanced increasing risks in relation to finance and technology. So we are expanding our scope and mandate. And lastly, ESG, sustainability. We are talking about making sure that we are investing responsibly, not only for sustainability in terms of our money, but also the environment, the ecosystem that we are in. So those are a few things that we are doing, and I'll be really glad if we can all become ambassadors for passing this message, not only for ourselves, but to others, that we can all save for retirement and we can leverage on those existing structures in the country for wealth creation. With that, I want to say thank you very much.